You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
They made a new discovery. Now that new discovery with intersections like 17 meters at 10 grams, the stock didn't move. There was no halt. Maybe there could have been a halt, but it was on December 23rd, right in the middle of the holidays, even bigger holidays in Australia. I mean, I just couldn't believe it. Like if that same news came out right now, I'm 100% sure the stock would have moved 30%, even in this market. So to me, that's an opportunity because, it just bad timing. It didn't change anything about the discovery or the deposit.
Welcome back to Mining Stock Education. I'm your host, Bill Powers. Thank you for tuning in. And we're touching base with my friend Nick Germain, also known as the Mining Book Guy on Twitter, CEO.ca. And he has a website also, which I encourage you to go to and sign up for his email list, MiningBookGuy.com. Now, Nick, it's been 2 years since we spoke. We interviewed in person at PDAC via a roundtable 2 years ago already, prior to when the pandemic lockdowns and everything began to occur. So it's great to touch base with you. You've been on kind of a media hiatus, it seems, since then. But thanks for coming back on my show. You are one of the content producers that I looked to before I started my show in December 2016. You were publishing back in December 2015. And when I was trying to learn about investing in mining stocks, I remember watching some of your early videos. So thanks for coming on the show again.
Oh, that's a really kind introduction, Bill. And it's great to be back after, I guess, a couple of years now.
So you like to come up with your own ideas. That's one of the things I like about your approach. You're an independent thinker. You like to find and own your ideas, and then you share it with others as you uncover these potential gems. And so you listen to my interview with Mark Zaret, who I interviewed late last year, and he's like you. He's independent, investing his own money, doing a lot of research, trying to find shell companies that could be worth something. Just introduce to my audience, or reintroduce to my audience, your approach of how you go about finding quality junior miners, please.
Oh, yes, Bill. So thanks so much for doing that interview with Mark. Honestly, probably my favorite interview anywhere of last year. I watched it 5 times. I watched it a 5th time just to prepare for this interview because for whatever reason, I got interested in shell companies last year after being in this industry for 7 or 8 years. And if I had an interview like that Mark Zaret interview years ago, I probably would have jumped in sooner. And I feel like I've missed out, but I also feel it's a great time for others to potentially enter as well. There was a lot of positive feedback to that interview. And so I'm hopeful that people who watch this interview, either they've seen that and they enjoyed it and they wanted an addition, or maybe they'll check that out after this interview. But there was a company he mentioned, and I think this is a good way to start out in terms of what I'm spending a lot of time doing in terms of shell research. He mentioned a company called Thumper Resources, has a cute little name, and it represents exactly what I would like to look for today. And so when I saw that interview, one of the first things I thought was, oh, I should look this up. And Mark had mentioned StockWatch. I only started using StockWatch last year specifically to do this shell research. One thing that might be a helpful tip, I spend $5 a month on my StockWatch subscription to basically do a lot of the things that Mark said. I think Mark had said he spent a lot more. So it's just to let you know, I think a lot of the really good features that he talked about, you can spend $5 a month on it. And when I looked into Thumper, I type in Thumper Resources to their database, then I find what the old ticker was, TMP. And then I look at TMP in the 1990s and I realize, oh, this company listed, I think in 90 or 91. And, they kind of failed a little bit with their initial drilling. And then there was an announcement of a rollback and an expectation of a name change. And this is really interesting because that's the type of catalyst you want to look for, or I want to look for in today's stocks as well. I also find it interesting that is in the StockWatch database, despite being pre-internet or basically pre-internet. So that is an advantage to us today that Mark had mentioned that he didn't have, though I do think it's really cool that he would get a hard copy every week and basically look at every single company. I mean, that is really neat. And I'm sure that was a real rarity, but even today, for someone to go through StockWatch and look in the history, that it's a little bit of the equivalent. And I think if that's something that interests you, consider doing it the same way as I'm describing right now. And so I caught this on my last listen of the interview. I think Mark had already started buying shares quietly in Thumper because of a press release that some of the shells were talking about. We want to be opportunistic and look for new companies, new projects to combine with our company. Those are really rare to see. I don't see any press releases like that today. And so if what I would go through is the MD&A. And some MD&As, they really talk about, that's management discussion and analysis. And you can find it on SADAR, but you can more easily find it in StockWatch. And when you go through that, you'll see if the company says literally nothing, like they're just not looking for anything. Sometimes they'll even say a lot of negativity. We don't have even enough money to look for a new project. We don't know what we're doing. But a lot of times they'll say we are very actively looking. And I think here's one big important difference for what I look for now compared to the opportunities. What might have been more opportunities that Mark had at the time were cashed up shells. I have found a few cashed up ones, but this has been a huge change in my thinking. You don't need. Sometimes it's even better if they don't have cash because they say they're actively pursuing, but they're funding it through debt, through loans that are provided by the current management. And so over and over again, I have found successful shells that have negative working capital that get halted, do a transaction, and then re-rate because they combine. They basically are RTO'd into a private company that already has the cash. So that might or might not be a new thing, but I think that's a really important point. Don't dismiss a company just because it has no cash or negative working capital. But it is great if you find a company that is fully cashed up. I'm not sure where Thumper was at that time, but as Mark said, it was kind of funny. Like it was already at 2.4 or maybe it was 2 million shares, and they were doing a 3-to-1 rollback. So they're going down to 800,000 shares. I mean, that is pretty much unheard of. But I am finding shells these days that are anywhere from 2 to 5 million shares or 10 million. And I do think the less amount of shares out there, the more valuable it is for you to be able to pick up shares in the company. It's kind of, you feel really good because they're so scarce. And this
is in the open market, to clarify, right, Nick?
Yeah,
in the open market.
No, thank you, Bill. And I really want to emphasize that even though a lot of people can participate in private placements for these shells, I think the most fun I'm having and the biggest opportunity is to quietly accumulate on the open market and perhaps over a few years. And I think Mark made that very clear. You need to be patient in this game. So specifically with Thumper, even if you weren't accumulating before the rollback and the name change, there was still another 6-month window or so to accumulate after that around the same price. And I found all of this data through StockWatch, assuming it's the correct data. And I think it is because StockWatch, for whatever reason, has done a really good job of keeping the history going back to the 90s or even the 1980s. And so 1992, December 23rd, 1992 was when the rollback was first announced. And I think you had until May 13th, 1993, until there was an official halt for a few months. And then Arequipa was the RTO'd company. And once it was unhalted, there was an immediate re-rate because there was a placement at a higher level. And so just to give you an idea, the way this works is very similar to what I try to do today. The trading range on Thumper Resources at that time was about 6 cents to 15 cents Canadian for that 6-month window. And even a few months before that, you could trade some shares as well. I think on average, there were maybe 3 days a month that shares traded. And there were a few months where no shares traded at all. But over that time frame of 6 months, and if we even include a little bit of time before the rollback was announced, maybe 10 to 15% of the overall float had traded. So if you were the only person trying to accumulate quietly over this time, maybe you could have accumulated 5% of the company or 10% of the company. And it sounds like a lot, but it's not all that much money for a company that's trading at $500,000 market cap or even a little bit less. And that is really neat because that is, as Mark said, you're very unlikely for the stock to go much lower. I think the biggest risk is that it could take a year or 2 years or 3 years for that transaction to happen. So in this case, this was an ideal situation. You had enough time to accumulate over maybe a 6-month or a 9-month period, and then a really good transaction happened. But a lot of times things can go wrong and your money can just kind of be stuck in some of these shells. And so again, patience is the name of the game. Just to add a few other points though, if you accumulated from 6 to 15 cents or so, I think the placement was at 25 cents. And then when the rollback happened, that would mean the placement equivalent was 75 cents and your accumulation was 18 cents to 45 cents. So you would have done better than anyone who was in the placement. It immediately traded well above that placement, so post rollback, up to 80 cents right away. I think it went to $3. It went back to 50 cents. And then it eventually went to $30, which Mark had mentioned. I think Mark he said he got at least a 10 bagger. So maybe he sold out at $3 or $4. And that's the thing. He could have sold even much sooner and gotten, a fairly easy 3 or 4 bagger. And so again, I think about these shells. It gives you the optionality of, if you really like the project, that you can continue with it. But I've personally become more open to even non-mining opportunities, because sometimes these shells, they just find whatever is the best project at the time. So I do like mining like the most right now, but I think it's possible when Mark was accumulating Thumper, he didn't really know what was going to happen. But just as I think in terms of the opportunity to hold longer, even though Arequipa did work out, it took 3 or 4 years, but what was interesting, it was an acquisition in Peru. And at that time, Peru was a very risky place in 1993, and it just got better and better as the 90s went along. So there's, you could sell some of your shares like right after the initial acquisition, and then you could hold on for the ride if you actually liked that company. And for me, that's the fun of this, is to kind of start the adventure on these little shells, do the best you can to try to accumulate a few percent interest in the initial shell. The RTO happens. You probably get a 2 or 3 bagger. If you're lucky, you already get a 2-3 bagger, and then you decide, oh, do I want to stick along for the ride? And there's so much uncertainty involved. But if you enjoy the uncertainty of who's the new management that comes in, is there going to be a new investor that supercharges it? Is it going to move up even though no one else knows about it? And sometimes that's a really good opportunity to stay in. If you know it's already moving and no retail guys are talking about it, to me, that's even more exciting, because eventually they'll probably will do a promotion. So I guess I'm rambling a little bit.
Hey, Nick, I have a question. So sure. When you do your initial screening and you come up with a shell company or a functional shell, what are the next steps? Could you talk us through a little more in depth? I'm assuming you're picking up the phone, of course, and you're trying to get into the mindset of management, right?
So that's a great question, Bill, because I historically have always liked to call companies early on to know what's going on. That actually is not a priority with these shells. And I should add something that is in my toolkit, and maybe for the listeners could be of value, which I know I don't know anyone who does it the way I do it, because I've developed it myself. I have a watch list just for shells on CEO.ca. So I don't use StockWatch as much for following today's day-to-day action. I use it more historically, and I use CEO.ca a little bit historically, but very much so for today. I went through my numbers. I have 231 shells just on my shell list on CEO.ca. That is not including all of the post discoveries or companies that are like really drilling. And that list is not all the shells in the world. It's just any shell that I had an inkling of interest, something that was worthy of putting on that list. And so a lot of times, I'll look through the participants, who are there, investors or directors in the company that I can find on StockWatch. Mark had mentioned that in his interview. I will also try to follow the trading as closely as I can without going, being kind of, it would take too much time to go through company by company, but I just scan the list throughout the day. And what's funny on CEO.ca, there's a little lightning bolt that shows up when trading is extraordinary compared to previous trading. It's funny with these shells where a lightning bolt might show up on one of these shells because it hasn't traded in a month, and 100 shares traded at 5 cents for the first time in a month. And so, that's not very significant monetary wise, but it's of interest. Just when you start seeing some accumulation or just a big move, it means maybe something's happening. And so maybe I'll look into it deeper, but I will not necessarily talk to the company, to get back to your original question, because a lot of these shells are being prepared by insiders, and they might see it as a negative for me to talk to them so early. I think there's actually a positive to quietly accumulate, not necessarily let them know what's going on. They might not be. They might think that you have an ulterior motive as this independent investor. Doing something so early. That's not always the case. I do sometimes call them, but I feel that in this particular case, you need to be comfortable with the uncertainty around, what the project may be. They might not want you to know at all because it's material information, but there are many instances already where I feel I've gotten enough data from CEO.ca and from Stockwatch from doing that research without calling them, where it was actually a better idea not to call and to just use all these tools that are available online. That's
a very interesting perspective, Nick, that you wouldn't reach out to the CEO. That was not the answer that I expected. But I'm sure you're watching insider buying, right? As you're watching the share action, insider buying is something you're monitoring closely.
Oh, absolutely. And that's something funny enough, years ago, I used to say insider buying was overrated. I feel completely differently now. So there's a lot of things that have changed. I do think for a post-discovery play, and there's lots of shares out, people are sometimes a little too obsessive about that. For these shells, it is absolutely critical. But interestingly, I think Mark had said he uses Inc. Research, which I know is a well-respected, a paid-for site. CEO.ca, I think, provides pretty much the same thing in real time for free. And by the way, I'm completely independent from CEO and from Stockwatch. I just like using both of them, but I'm partial to CEO because I do pay a lot more money for their level 2. I think $86 US a month. I think you can pay it in Canadian, or there's different tiers, but I pay a lot mostly for following the day-to-day trading activity, even though some of these shells only trade a few times a month. So, sorry, I think I lost my train of thought on maybe a part of that question.
Yeah, just tracking insider. You answered it. Tracking insider owner. As you're going to add to your position, or you're going to say which one of these shells is going to move forward or possibly take off, I would assume you're looking at insider trading, yes, which is what you said. And
I think you can't always expect to get in cheaper than what the insiders get in, but sometimes insiders will accumulate a position in some of these shells, especially the zombie shells. There's one I'm thinking of in particular where it was a failed company, and sorry, I sometimes I don't want to share the names of some of the ones I'm doing right now because I'm literally the only one on the bid. So that's why Thumper is such a good example. But the way Thumper works is similar to the ones today. It's just that they may accumulate shares through a private transaction. Maybe it will be at a cheaper price from where things are trading, but that is an example of an insider activity where they didn't buy on the market because it's so illiquid. So the way that people, accumulate a position is different. Sometimes there's debt settlements, and that can be a catalyst. Not to go too much on a tangent, but sometimes you'll see a debt settlement at a certain price, and that means whoever's doing that debt settlement, they're converting to equity. And it not only does it mean that they've taken shares for real money. It can be abused, but it still means that they want the equity to go up from wherever that debt settlement price is. And it also probably means that there's going to be other interesting news not too far behind it. So that's just another example, not exactly an insider buy, but it fits into it, and it's something I monitor.
So Nick, last year in 2021, what did you learn? Like, what are some of the key things you learned last year? You've been speculating, I think, for 8 years, is it? You've been
Yeah, about 8 years.
8 years. Okay, so what did you learn last year?
I wish I could be more exciting with my answer, but I learned patience, and I can't emphasize it enough. I mean, Mark said it in his interview. I actually guess don't hear it across the board, but I think from a lot of people I respect, peers, or people like Mark, you can just kind of tell from their demeanor. I honestly think a lot of people are more patient than myself, and I think it just takes so much time. It might be even harder to do in this environment where there's so many other ways to make money, outside of junior mining. You see get rich quick stuff all over the place. I think I've realized that whether it's a shell or it's a company that's kind of getting started having real drill programs, I should have a time frame that's at least 3 years, 4 or 5 years. I think I was trying to be patient, but I used to think 1 or 2 years was kind of enough. And last year, I think I really realized that. And another reason I realized it is I was so sure that M&A activity would pick up sooner. I know it's going to, and maybe it will now, but there was a far less mergers and acquisitions last year than I expected. That might be COVID related too. Just there weren't enough conferences. The face-to-face is really important for a lot of companies to do, and the site visits, which were harder to do. But I think just being more patient across the board, realizing for the times I have made money quickly, that had way more to do with luck than just me realizing my timing was right. So can't emphasize enough patience. Maybe 3 years is still too short, but I would say three to 5 year time frame on so many things I look at. That was a big learning point last year.
As you mentioned, you use CEO.ca to research. We didn't talk about Twitter, but there's also a financial mining community on Twitter. Has it changed at all how you use these resources in your due diligence process over the years?
Yeah, good question, Bill. So Twitter didn't seem to be used as much for mining until 3 or 4 years ago. I initially was very excited about Twitter, and I still think it's a really nice complementary tool. But over time, for better or worse, every site evolves. With Twitter, I think it's fair to say there's most tendency for like a cult of personality to develop around people who have had success or who are just really loud or good at marketing themselves, who don't necessarily have success. And that is not just a mining thing. This is a crypto thing, cannabis. I mean, anything hot that's get rich quick. And the problem with that is that I think we turn off our critical brains. Like we just start following someone who's hot and we want their next pick. And I've seen over and over again, people have some really good picks and then they have a drought and then they might have some other good picks. But a lot of times the losers get forgotten, but more importantly than that, people are just kind of craving to be fed some new pick. And I actually saw that. I kind of felt that myself when I was using Twitter very actively in that way that, maybe some people, they just wanted my next pick. And I really want to get away from that, but it's tough because Twitter is a better platform, I think, to promote something that you really like and to go into threads and have people kind of get on board. But I like CEO.ca, despite CEO having a lot of other issues. I think it's actually much harder for a new person to use CEO. It is so great that there's all these company rooms and that all of these shells, they all have their own rooms. And I mean, these 231 shells I just talked about, I don't think any of them are talked about on Twitter. And I see them on CEO and I can check every single room. And many of them, not a single person has commented. Sometimes there's not even that much news. Sometimes more news shows up on Stockwatch. But the key is it's always interesting when there's either no talking or maybe someone I respect has said something a year or two ago. And that's all that there is. So it was kind of like, someone was paying attention to this way early, but maybe now is the time it's interesting. And maybe this is a good opportunity just to give a shout out to Luke Tenhava, who I know has done an interview with you. I feel like he's kind of the new Mark Zaret. I mean, there's just so many plays that I've looked at on CEO that I felt like, oh, I think I discovered this on my own. And then I'm like, oh, Luke found this like a year or two ago, but like that was a good thing. And so what he's done on CEO, anyone could follow what he's done. It's just finding all these shells and sharing a little bit. And there's one in particular, Angus Gold, that I think Dave Kranzler had mentioned in one of your previous interviews. That was one that he found really early. I just wanted to mention it because for me, researching that one from when it started in 2017 until now, it has done the successful transition. I mean, maybe it will do the Arequipa type thing, but that's a recent one. If I was going to mention one where I am a shareholder of it, but I wasn't in really, really early, but the researching of it from early shell to now is a very good model that I'd like to find in other places.
So, Nick, are you more energized and excited about getting into the shell, accumulating your position before the RTO or before the project acquisition, more so than like looking at the geological prospectivity of an explorer and getting on board before they make the discovery? Like, how does that approach? What fuels you as a mining speculator?
Good question, Bill. I hadn't really thought about that direct comparison. I feel that maybe at the beginning of last year, I was starting to not enjoy the exploration side as much because there just weren't as many new companies for me to look at. It is very exciting when it works out, but I felt like I kind of had my fill of the explorers. I knew kind of everything that I liked that was out there. And in a weird way, I guess the shells have really kind of rejuvenated my excitement because there's so many of them and they're so hard to accumulate. There's more of a thrill when if you've been trying to accumulate for a month or two, you finally got a fill. And honestly, it could be like 10,000 shares at 10 cents or 15 cents. I mean, it's for some people, that is a lot of money. But compared to some of my other explorers in my portfolio, this is just a fraction compared to some of those, but it's actually more exciting to get that accumulation. And I think a lot of the shells that I will ultimately own, I don't expect the positions to be more than maybe $5,000 or $10,000. But they could grow a lot larger. But I think the level of excitement is disproportional to the size of the investment. So even though they're fairly small, I would say it's more thrilling to do that. I think it takes a very specific personality for that. Maybe I shouldn't get as excited about it, but it's something I can do on my own. I think anyone who really likes doing their own research, you have a lot of benefits to be solo, to kind of live in your own head. And I mean, there's a lot of these companies I haven't talked to anyone. So it might be also, it's part of the times. Just it's harder to go to conferences. I really wanted to go to VRIC and MIF in Vancouver and to PDAC. Hopefully I'll go to PDAC in June. But these shells, it's actually more fun to do this when you're not going to those places, because I don't want to tell people about, like if someone asks me, Nick, what's your next pick? I don't want to tell them about the 5 or 10 shells I'm accumulating. So I think that's part of it as well. It's great to do on your own.
So if you're focusing on the micro of, finding a shell, are you still paying attention to the macro, the big picture trends that are going on in the sector?
I would say in the sector more so than like what the Fed is doing or just the gold price. I do follow that a bit, but I don't go too deeply. I do think on the macro side, M&A, as I mentioned, is very interesting. I mean, there's fewer and fewer quality gold projects, for instance, out there. And I think we're getting closer to that transition eventually of there'll be a flurry of buys for the advanced developers. And then there's going to be more looking at those explorers, not necessarily early stage, but companies that are that are more in that growth stage on the explorer side. And Great Bear is an example of that because it got bought out by Kinross before they even had a maiden resource. But that's I think we're getting closer to that, which I think is very exciting. And I also think it's great that that producers have so much cash. I was talking to someone about this, and I think it's interesting that maybe there will be a lot more cash buyouts soon versus share buyouts, just because these producers have so much money and their share price is low, but they have a lot of cash. So I think that's an interesting trend, but I can't say there's anything that probably really stands out that's different. I mean, other people may have kind of found the same thing happening. Yeah.
What's your most contrarian investment right now?
If I think about it from a commodity perspective, it might not be the best answer, but maybe it'll be useful. If I think about silver, I've never really been a silver bug, or at least not in the mining space. And I think this might be helpful for people to think about. I really didn't like the opposite in terms of like not being contrarian was when Reddit and the Wall Street bets crowd were trying to have silver piggyback on all of the GameStop and the AMC hype and crypto hype and all of that. And that I was just like, oh, this is anything but contrarian. Things have died down since then, but the next step, and this was a surprise, I wasn't following Gatto Silver closely, but man, what a disaster that is. And that I think Tom Kaplan, a billionaire who's had a lot of success, has backed that. A lot of people got into that. There's a lot of disgust in what's going on. And I think we're not at a bottom for silver, but that's the type of stuff I like to see, going from the hype to these negative stories. And I've started to accumulate some silver plays when I haven't in the past. And I think maybe later this year, there's a chance that silver could be more at a bottom, or finally for something that I would like, where it's always been hyped up more than gold, at least by the North American market. So I think looking for those signals and hopefully having people be more apathetic about silver later this year, to me, that's the contrarian bet that I'm monitoring most closely.
So as I mentioned at the outset, we haven't chatted publicly on this show in 2 years. So what's been the biggest winner in your portfolio over the past 2 years?
Oh, yeah. So maybe this is part of the reason I pulled back a little bit. It was Chesser Resources, which is CHC on the ASX. I think there's an OTC. No, I wouldn't even mention the OTC because I think it's too illiquid. So that stock is one that I had picked a while ago, and I think we talked about it 2 years ago at PDAC, and it was actually in a free fall at that time. In August of 2018, they made they halted, made a discovery. It tripled overnight. I had a massive position. I mean, I've never had that much money instantly go into my account. I did not sell everything at that moment, but I sold a lot. And that was kind of a life-changing moment for me. And I think I kind of pulled back a little because it felt a little weird. So I definitely felt like I didn't want to do any interviews after that, but that was a very exciting moment. Just what going through a halt and literally having a stock triple out of the halt.
So, and then are you still bullish on that company, or what is your take now? You mentioned you took some money off the table. What are your current thoughts?
Yeah, well, I wanted to talk about it a bit. I don't want to say that is the most contrarian play, but I guess in terms of size of my account, I do consider it a very exciting contrarian play right now, because it's been such a roller coaster of a stock. It was when I first got really interested. They made an initial discovery. It was at 10 cents Aussie. It went as low as 4 or 4.5 cents at the depths of the market. They had to raise near the bottom. And then they made that discovery. It was halted at around 10 or 11 cents, went as high as 32 cents. And now we're back at 10 cents. We're back at the level it was after an initial discovery, a really high grade resource, and more discovery. So it's interesting because I was not involved, or I still own shares, but I own far less shares. And now I'm almost back to where I was when that discovery happened in 2020. And if I was going to try to distill it into 3 points, Chesser is a high grade discovery, near surface deposit in Senegal. In West Africa, there are many other deposits that probably look like it, but I personally consider it to be probably going to have one of the best scoping studies, or PEAs, because of the nature of the deposit. It has 3, 4, 5 grams per ton, close to surface, with a really good geometry. Most of the high grade is actually closer to surface than at depth, which is different from a lot of other deposits. But right now, that maiden resource is 700 or 800,000 ounces. Now, there's a lot of other deposits in West Africa that happen to be like that. So on its own, I can't say that that would be enough to say this is a screaming buy. But number two, they made a new discovery. Now that new discovery with intersections like 17 meters at 10 grams, the stock didn't move. There was no halt. Maybe there could have been a halt, but it was on December 23rd, right in the middle of the holidays, even bigger holidays in Australia. I mean, I just couldn't believe it. Like if that same news came out right now, I'm 100% sure the stock would have moved 30%, even in this market. So to me, that's an opportunity because, just bad timing. It didn't change anything about the discovery or the deposit. So this discovery is on top of what is already there. And I think this deposit, it's on its way to 1 million plus ounces. And most of those ounces are going to be mined, which is also something to think about if you're newer to the sector. Just because the deposit has 3 million, 4 million ounces, maybe none of it will be mined because it's not economic. The geometry, it's too deep. I think a very high portion of these ounces will be mined. So that is point number two. But number three, I think, is the biggest. They've made multiple discoveries next door to Barrick Gold, which is highlighting their discoveries in Senegal, which is true greenfields for them. And there is no other play in the world that Barrick has highlighted as much in their quarterly reports. And I just can't understand it. For 2 years now, Barrick, I've been following Barrick updating on their Senegal discoveries next door to Chesser. Chesser is the only junior next door to them, and it's just getting better and better. The last quarterly was, they had a full page devoted to it, and Barrick would only do this if they thought that this is an exciting new district that's going to have 10 million plus ounces. I mean, that's what they need. So what that means is that either Barrick is going to ultimately buy Chesser, and it's going to be whether Chesser has 1, 2, or 5 million plus ounces, there's going to be a combination there. Or Barrick may give up, but they have done enough work. I'm 100% confident on this. There's going to be at least a few million ounces on Barrick's ground, and either Chesser will buy it or some other mid-tier will buy both Chesser and Barrick. And I can't emphasize enough, there's no other play in West Africa, let alone the world, that Barrick is pushing as much as this. The market doesn't care. This is where, like, in terms of contrarian signal, I get so excited because I just keep buying as it goes down. Now, keep in mind, the same thing is happening right now as happened 2 years ago. I sent alerts out to my my free email list saying Chesser's a buy, it's a buy, and it went down and it went down and it went down. But eventually, it tripled from that initial price that I recommended it. I think the same thing's kind of happening now because I first talked about it at 14 cents. And I forgot to mention Silvercore, a big, fairly big Chinese-based company listed in Canada and the US. They bought 5% or almost 6% of the shares on the market at 13 or 14 cents. So there's a strategic investment already that's been unacknowledged, and they paid 30% more than where Chesser's trading right now, right around 10 cents. And so there's all these things in its favor. It's just it's an average down situation. So if you're like me, you don't care as much about the technical charts, but I could totally understand some people, they just don't want to buy because they think a capital raise is coming, or they just think there's bad news. But all I see is good news, and I just see the share price down. I think there's one big seller that's just about done. The highest volume day in the last 3 or 4 months happened on Friday, 4.5 million shares. That's usually a sign to me. It's not necessarily enough for other people, but I'll just tell you, I'm almost out of money. This has happened to me before, but mostly buying Chesser. And so I wouldn't come onto your program, Bill, and talk about this if I wasn't completely convicted, because I make a lot of errors, but I really want to talk about companies where I think it's a great buy, and it's a lot cheaper than anyone I've talked to on my email list. But of course, if you're on my email list and you've already been buying, I'm just continuing to recommend it. There's 5 million cash in the coffers. They're going to have a scoping study. They're going to have follow-up drill results. And Barrick is going to have their Q4 2021 update on February 16th, I think next week. So there's 3 very interesting catalysts. And that's why I think it's the perfect time to consider it if you want a contrarian, like really big potential story, but it's obviously not being treated as a big potential. It's about a 45, 50 million market cap. I think 10 cents, 450 or 460 million shares out. So there's a lot more to it, but I think I'll leave it there because that was
okay. Well, Nick, thank you for that update. Best way for listeners to follow you and get access to your thinking when it comes to picks like Chesser.
So MiningBookGuy.com, easy way to sign up for my email. I apologize that it's just a splash page. I haven't really updated the website, but I'm not really actively looking for people too much. I think the way I research stuff, I go into a lot of detail, but I don't get paid by these companies. I only send out an email every month or two, so you can try it out for free. If you want to unsubscribe later, that's fine. But you'll usually get a detailed video from me on companies like Chesser.
Excellent. The website again is MiningBookGuy.com. Link is in the show notes below. I will also put links to Nick's profile on CEO.ca. I'd encourage you to follow him there, as well as Twitter. Nick, thanks for coming on the show again. It was too long, but I appreciate you coming on the show again.
Oh, thanks so much for having me, Bill. It was really fun.